Chinese growth has slowed, the commodities supercycle is over, and the end of quantitative easing in the US is surely coming. So after years of strong growth, how much of a worry is the lack of structural reform in emerging markets? Well, Jonathan Wheatley, Deputy Emerging Markets Editor, joins me now. Jonathan, if we take a look at this chart, we can see how some emerging market economies, or currencies, have performed against the dollar since the start of the year. What does that tell us, do you think, about the picture in those different economies?
This is a really interesting chart. A lot of people know that from May, when the Fed first started talking about easing off quantitative easing, tapering quantitative easing, there was a across-the-board sell-off in emerging markets. If we look at what happened to these 5 currencies that we've looked at more closely, that's actually not true. You can see that there were some currencies that really suffered. The Indonesian rupiah and the Indian rupee, the 2 worst performers there. And that's partly because they had things like big current account deficits that people worry about. But others have done comparatively well. The Polish zloty is actually slightly up on where it was before. And the Chilean peso is only very slightly down. And that's a country with a great big current account deficit. So investors are not only looking at whether something is an emerging market or not, and not even whether that market has a big current account deficit. It's a much more complex picture than that. Chile's current account deficit is relatively well covered. They have sensible things like a big sovereign wealth fund that they accumulate their earnings from copper exporters and so on. So it is really quite complex, and it shows, I think in this case, that investors are recognizing which countries have more or less put their house in order against those that really still have a lot of work to do.
So a complex picture, like you said, but what's your own view? Do you think that many emerging markets perhaps should have been more aggressive during the good times?
Well, I think a lot of them are thinking about that now, and when the Fed decided not to taper in September, what was said by a lot of people was, here's a chance for these big emerging markets, to a lot of countries in general, to do the hard work that they didn't do during the easy times. Emerging markets had a huge run-up throughout the first decade of this century, and even after the financial crisis, quantitative easing kicked in and there was loads of money being pumped in. And I think a lot of them decided that the reforms that people like the IMF and the World Bank and others have been telling them they really needed to do from the 1990s, when we had the huge crises across emerging markets, they decided that either they didn't really need to do them now because times were so good, and even when the financial crisis came along, decided that actually they weren't a very good idea after all, because this is what free liberal markets do. It leads you down into crisis, so why should we do that? So a lot of those kind of reform strictures were discredited. Now people are asking those questions again.
So what's next, do you think? Are we seeing, or are we going to see a return to the Washington consensus?
I think a lot of people will be sort of uncomfortable about that, but basically yes. I think in its strictest meaning, no. I mean, there are certain things that people don't necessarily need to do, but the idea that in order to secure long-term sustainable growth, you need to put your fiscal house in order, you need to have flexible labour markets, you need to have institutions that people can trust, you need to have confidence in the banking sector and so on, which people have done. But these other things like labour market reform, taxation, public spending, things that are much harder to do, that require, you have to convince politicians and voters to back them, that's very tough. And I think those people, a lot of countries are still going to find that tough, even in this new environment.
So a final question. The emerging world will, of course, argue that they're much less exposed to external shocks than they were perhaps in the 1990s. What do you think? Are those claims justified?
I think in part they are. If you look back to our chart, we see Chile and Poland, who've done a lot of what people told them to do. The consensus was, a kind of Washington consensus, they should do that. They are better protected. The ones who haven't done it, I think some of the ones who shout the loudest about having done reform really haven't gone far enough. They've done the simpler stuff, but the tough stuff still to do.
Okay, Jonathan, thank you very much.